Good afternoon, Scott Redler, T3Live. Welcome to today's recap. So it is Wednesday. We are midway through the week, and we have another event behind us. The Fed has come and gone, and Big Ben gave his testimony, and then he had his conference, and really didn't say anything too different. Everyone was trying to grill him. Everyone was saying he's behind the curve. You know, how come you didn't anticipate that? Why isn't this going as planned? And what could we look at as far as a headwind? And what I took out from it, first of all, I like Ben Bernanke. I think that he's honest. I think he tries to do the right thing, and I think he's been staying the course, and he's been very helpful. I don't care. People say that he put inflation out there, he inflated assets. I think he's done a great job. But what he said today, which I feel is interesting, is when was asked about what about European headwinds or about just all the unforeseen circumstances, he really just said, listen, he goes, everyone has to take a look at their own finances, their own situation, and act responsibly. If everyone acts responsibly, everyone has a little confidence that, you know, we can make progress and you can navigate the markets. And that's the mantra that we have here all the time. Trade within your bounds. Know whether or not you could hold 10 positions, you could hold for a few years or for multi-months, or know if, you know, you have to trade just intraday because you don't take risk at night, or it's 1 to 3 days or a week or so. So if you know your own parameters, if you know what you're comfortable with, you're always going to have success because you're always going to think clearly. So, you know, what I said this morning is, what did we learn yesterday? We learned that the 38.2% retracement held. It was buyable, different than the 25% retracement. And what we need to learn now is what type of bounce are we going to have for future direction. You know, we talked about some gap fills to play for cash flow. And then you also had some of our go-to stocks making historic highs to reward those who are sitting in positions in a macro one for the longer term. So if you look at the chart of the S&P, you'll see this ascending channel that I drew. Okay, this was that ascending channel that's been in place, which has had all the pent-up energy ever since we broke this little mini downtrend when we saw a commitment to this bottom that was put in October 4th. And what did? We came back and so far retested it. We didn't blast through it. We didn't take back all of yesterday, but there was some room from where we were at the highs to come back and retest. So I think the next day or so is going to be interesting. If I just real quickly put that fib retracement back up, you will see that, you know, we held the 38.2% retracement, which was right around here, and we said that the 25% would probably be a little bit of a resistance area, and then you attach this, you know, this uptrend that held the entire way to become resistance. And now we'll see. I think if they want to push the envelope a little bit, you have 1251. The gap here gets closed around 1253. In my opinion, if the bears want to just really keep the bulls on their toes, they won't let the market get too much above this 1253 to 1255. So we'll see what happens, obviously, overnight. We'll see what happens with the news. But, you know, someone was asking for an analogy. I feel like, you know, after those 2 down days yesterday, the bulls probably had 3rd and 8. You know, they had Sanchez getting pressured from all odds, and he completed a pass to midfield, and he got a new set of downs with today. So now it's the Bulls' ball to lose, you know, as they march down the field. And the way you march down the field is you go back above 1250, 1255, and you hold. You start getting better participation from some of the stocks out there. You start getting more healthy breakouts. So as you do that, you keep getting a new set of downs, and then that's how you continue to keep momentum to win the game. Right now, you know, the Bulls are still up in the game, and they have the ball back, and it's time to see, you know, what kind of defense the Bears can play, and they have their own lines in the sand. As far as some stocks, you know, MA was a huge gap up on earnings. We've talked about this as being an institutional quality name for investors for the long term. Historic highs, congratulations. Sam, I haven't really talked about except for that it's one of my favorite beers. If you are a long-term holder of Sam Adams, you are now almost at historic highs. Congratulations. You can make money as an investor if that's what you do. As far as, you know, Visa, it also tried to, it's actually just hanging out. Visa didn't really do much, a little tricky. That's why I think a lot of people aren't really trading Visa, but holding it is okay. I think at some point it could go. Some other stocks that we talked about in the morning call, we talked about CF. It was down like $4, and I was like, you know what, ag stocks for some reason always blow off bad earnings. They open down and then they squeeze every short, and CF was actually even more powerful than anyone would have thought. If you look at CF, it's one of the best acting ags, probably one of the only ones. So it opened up down, engulfed it. I would say if it could hang out a little bit longer, we can get a nice trade through this 170. It's actually hanging tough in the game, one of the best ags. And I tried to look at some other ags, which I'll go over with Jill tomorrow. They don't really have any great momentum setups, but maybe they play a little catch up if the market hangs in tough. As far as just some quick little gap fills, Caterpillar, people were asking, gave you, if you're an investor, great. If you're looking for cash flow, as soon as it traded above this high of yesterday, some guys played it for a tiny bit of follow through. And there was a lot of these type trades, a lot of trades where if you weren't holding longs and you weren't looking to have that type of risk, you had a gap from yesterday. And obviously this was one of the stronger ones. It traded off the lows while the market didn't. And then you had a little bit of follow through. So nice trade if that's what you're looking for. Amazon actually off these lows, it's coming into another nice setup, right? Yesterday, Amazon came off the lows, showed some relative strength. Today was up, not exciting or anything, but now you have a little level here. If you were short, from here, or you shorted thinking you were going to break the 200-day, right now you're against the ropes as we could push into this gap. So this could be, if it opens up down and trades through, a nice little cash flow trade for traders. And if you're an investor, you probably have to sit tight and you're going to need some more time for this to pack and fill in order to get going to prepare for next quarter, which hopefully will not disappoint like this one. As far as Apple, traded it short, in the beginning of the day, it showed relative weakness. It was really hard to make money, even though it went from like 400 down to almost as low as 394. It was tricky. It's still in this box. It's still just not showing anything outrageous. It's just trading in this defined range, holding the 50-day, and then the earnings gap with this eye on top is still containing it. I guess if you want to compartmentalize it again, here's the bottom half. The longer it stays in the bottom half of this overall inside channel, perhaps then it breaks. Or tomorrow, if it pops back above this 444, we could probably get a little bit of a trade back into the upper end of the range, and then we'll see what happens there. But for right now, if you're an investor, sit tight. If you're a trader, there's only little micro moves, and it's really not the place to be. Some guys made some money in Netflix today. There was some action early. We saw some volume. It's looking like it's just trying to continue to edge forward for guys looking to play it intraday or hold it versus that low from earnings. It's obviously something you have to watch out for news. But if you look here, a nice little setup. Here is the earnings shortfall. Things have been crushed. I would think that if it were to start getting above this area for cash flow, you're going to see some shorts get squeezed. And I think this number right here is about 85. So above 85, there's a big gap all the way up to about 100. So for us, we could probably play for $5 or so, or maybe even more if it comes up with some kind of catalyst, or if volume just plays it through this this level here. This is not our problem. This is not our problem. We're not holders of Netflix, and we saw the technical damage early. This could be a nice little cash flow trade to the upside. I'll probably focus on it tomorrow, but I might be studying for my test, which happens later that day. Sorry, I've been a little less involved. I've been coming in doing the morning report. I've been trying to give everyone a game plan, talk a little bit the first hour, but I've been out studying. Another scenario we talked about, which we're on fire today, were the miners and gold itself. Alex and I did a video. If you look at GLD, opened up and it actually closed pretty strong. We showed the macro pattern where yesterday it showed relative strength while the market closed on the lows, so it was worthy of a trade. You got paid with some follow through, and now it's knocking on the door, this small little downtrend. So if it does start to get above this 170, you could see a cash flow trade to fill this gap, which is about 173. So this could be on the radar tomorrow, depending on how it opens, if it doesn't just gap into it tomorrow. For all of you guys that bought it yesterday and you're still holding it, it looks okay. It looks like it can go. This GLD gapped up and tried to trade through this 115 level we talked about. Didn't exactly hold it, but I think it's okay still. It's come a long way, so maybe just being a tier 1. Newmont also is spoken about, setting up real nice in this nice little macro wedge up here. If it starts to get above this 68, 68.50, it should go again. And if these miners start to really catch fire, this one will be the leader. It actually has a yield and it's got liquidity, and a lot of institutions feel comfortable there. As far as some of the banks, they still lag. There's still a lot of people talking about MF, a lot of balance sheet issues across the board. So if you look at Goldman Sachs, you will see that I showed you how Caterpillar filled its gap. Well, stocks that didn't fill their gaps today, which we'll take a look at, are still considered weaker, right? People would have thought it was on sale if they filled the gap, but if they didn't, it's showing you that they don't think it's cheap. But anyway, this will be a level we watch tomorrow, about this 107 and change, and perhaps if we open up flat and it trades into it, we get a nice little cash flow trade. If you sold some strength and you want to be long for the longer term, this is a better area than when your influential analysts start chasing it at 116. But again, it's not really the place to be. Some other stocks I think were on fire today. EOG, big move, nice gap up, and then continued through some resistance. So this stock looks like it's in the game, acting well. VLO, not a great pattern, but still holding higher, trying to work through. Maybe it can negate this wide range bar right here tomorrow if we get some follow through. As far as some other trades, let's see what Baidu did today. Held up somewhat. It's sort of in this little, I drew this line before, this was that downtrend that it broke, and then here it held support again. So it does have some room to get back up there if they want to start giving some love to these high beta names, and this one is in the game for some of that affection. Looking good, earnings are behind it. Google still driving a little people nuts. Still in this channel, still going sideways. I guess it's still absorbing the move before the actual earnings hit, which caused this last gap up. Holding support, this 578 still intact. It didn't fill the gap from yesterday, but maybe tomorrow it gets in there, fills it, and then continues to maneuver, and then perhaps gets some momentum at some particular point. I know LinkedIn's coming out with earnings after the close today. I'm not sure. No one really took it into it. I think guys are trading it now afterwards. Qualcomm was up like $4 before I came in here. It's been also an institutional quality name that we've talked about. If you want to have a list of 15 stocks that you're going to hold long term, Qualcomm has been on there. SanDisk has been on there. MA's been on there. Visa's been on there. We also talked about LVS being on there. All these stocks they're taking turns making new highs, and if you could sit through it and you want to be invested for more of the longer term, we talked about macro tier 1, only like 6 to 12 positions, because I don't think anyone should have more than that. And then at certain times add cash flow to it, and then also maybe add cash flow in stocks you're not even looking at if they have a decent setup. As far as silver, someone's writing in, it looks okay. Nothing spectacular. This was your breakout on silver. Filled the gap. I love when stocks fill their gaps. It shows you that the bears just lost control there, that people thought it was cheap, filled it, came back in. We'll see if it can work higher, but it's still being controlled by this major gap. So we'll see what happens. Then you have the moving averages. So there's just a lot of resistance in silver, so I wouldn't get so fancy there. Let's see what's going on with SLB. SLB, it just shows you how you can maneuver. You see the low, comes up, goes sideways, you get a little bit of excitement, then it comes back. So if you missed this gap up, you had a chance to buy the retest of this level. And it actually was somewhat stronger than some other things I showed you, because it already closed the open gap from yesterday, showing that it was on sale and people took that sale and bought it. Some other things that didn't take the sale, like I guess just go to even the XLF, did not fill the gap. Let's see the moves. Okay, ags filled the gap. Not bad. That's showing you that some people said, okay, you had a huge gap down on Tuesday. No one was able to buy it or sell it in here, and now the buyers came in. So it's showing you that it's still intact. From move from 40 up here, it's holding in pretty decent. Not too bad. Maybe we'll start seeing some other stocks in this group start to wake up. We'll talk about that tomorrow again, in the morning call with Jill. I think we're going to be doing the ags in the trenches. And that's really about it. Today was a difficult day. They gapped them open. They gave you a little bit of, opportunity when they sold it off. When the Fed started talking midday, it went right into our resistance at 124, 124.50. I talked about that as being a resistance area. So it sold off. And then if you bought the dip, there was a little maneuvering to close back at the highs. So you were able to do it. And obviously, there wasn't a ton of opportunity. They gap them up like that. They give you like a little bit of leeway in order to be perfect. But then there was some relative weakness and strength. And I just think today was just another day. The bulls have a new set of downs. They're not backed up in their own below their 20 with a 3rd and 8. They're now back over the 50-yard line. They have a new set of downs, and it'll be up to the Bears to play some big-time defense because the Bulls have been in control for about the course of the last 3.5 weeks to almost a month. So we'll see how we open tomorrow. Jobless claims in the morning. You know, the G20 starts. I think Merkel is meeting with Papandreou today. So there's still a lot to deal with. So just make sure you can handle whatever it is you put on. So trade within your means, live within your means. I'm glad that Uncle Ben is talking the same mantra, because all it is common sense. And if more people acted with common sense, I'm sure the world would be a better place. Scott Redler, T3 Live, the recap. See you tomorrow morning. Have a good night.